Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zaegel. Let's talk about shiny objects. And I'm not specifically talking about things like gold and silver, but they often tend to wind up in this category where investors will tend to get fixated on certain things. And it doesn't make them bad things at all. So I mentioned gold and silver already. That tends to get fixated on a lot. Now we have cryptocurrencies. But it's not just those things. It can be other just stock investments that tend to get a lot of attention, and some of them wind up being great investments. So there's nothing wrong with that intention. But a lot of times it gets a little bit too much focus versus looking at the big picture. So for example, I was in a client meeting a couple weeks ago, and this was the day in which Intel stock shot up. We got a new deal. I'm not going to go into all the details, but the stock shot up that day. And the people I'm meeting with are saying, do you have Intel stock, or do we have Intel stock? Because they knew it had a big day, and it was a very valid question. And the answer was, well, no, because Intel hasn't really been a great investment in a while. I used to invest in it all the time, a decade plus ago, but it hadn't been that great of an investment for a long time. So there was no reason to hold it. But in a lot of people's minds, that's still a major stock, because it was a major company and a major stock for such a long time. They look at it and they kind of get fixated on it, even though it's not that big of a company anymore. It's not that significant. It could make a comeback. I don't have an opinion on it right now. I haven't done enough research, but I'm just using that as an example of sometimes people will either have a history with something, or it'll be a brand name. We see that a lot with brand name consumer things that people will get fixated on, and they'll miss out on a lot of other opportunities. So it's not that you shouldn't give any focus to these things, but be careful not to get so fixed on them that you miss out on everything else that might do just as well or better. We'll use a couple of examples. Gold and silver have done great this year in 2025. Cryptos continue to do well. There's a heavy emphasis on the data center stocks. There's heavy emphasis on nuclear technology, quantum computing. You can kind of go on and on down the list. There's a lot of things that are getting a lot of attention, and they've all done well this year, especially in 2025. So I'm not speaking negatively of anything. What I want people to understand, and we talked about this on the last episode, we talked about the fact that you don't have to be right all the time. And it's also important to size your investments appropriately. So I have zero issue with somebody wanting to invest more heavily in something specific because they have a certain view on it. There's nothing wrong with that at all. And I especially like when people are already in good shape financially, and maybe they can make a more aggressive investment somewhere that they want to focus on. So for example, I'm going to use two client examples. I'm not going to name their names, and I'm going to change the dollar amount so you won't even have any clue who they are. I'll use retired client as one example. Really likes things like gold, silver, crypto, all that stuff. All fine. Totally fine. Now, the retirement is in good shape. We've got the plans in place. They're having no problems. Nothing to really worry about at this point financially. So awesome. Client says, hey, I know we're good with this chunk of money. I want to take this other chunk of money and be much, much more aggressive in these other things. I want to go super aggressive in crypto and gold and some other investments, because I know that chunk A is taking care of my retirement, and now chunk B, which is a relatively smaller piece of the pie isn't needed for retirement. I want to be really aggressive in these other funds. Go for it. That's fantastic. Yes, do that. That's what we want to see, is when you're already in good shape financially and you can take a lot more risk with this other money, knowing that chunk B here, which is a smaller chunk, that could go to zero and it doesn't mess anything else up in your life, because chunk A has you taken care of. That big chunk of money has retirement set. That is an awesome place to be in. Now, somebody might want to sit there and debate, well, what are you putting chunk B invested in? Is that a good investment? And should you be doing that? Blah, blah, blah. Doesn't matter. Their retirement's set. They're in great shape with chunk A of money. Do whatever you want with chunk B. Go for it. Doesn't matter. You're set. Now, I know a lot of people wouldn't like seeing chunk B go to zero. That's not fun. But again, it's not going to ruin anything. So if there's something there that you want to focus on, if there's a quote unquote shiny object that you really want to be paying attention to and focus on, go do it. What we don't want to see is somebody saying, hey, I think X is going to be a good investment, and X can be anything. It can be a metal, it can be a cryptocurrency, it can be a specific stock, anything. We don't want to say, I'm going to put 100% of my investments in that. That is bad news. We talked in the previous investment about not feeling like you always have to be right. If everything you have is in one investment and you don't have a ton of control over that investment, that's not going to work out too well. That's a little bit different than, say, owning a business where you are able to own it, operate it. You have a little bit more control over it, and you have a lot of your net worth tied up in that. It's a little bit different, although even in that case, we want to try to take some money out of that and diversify it elsewhere also. But in most cases. But if you are investing in some other thing or other stock, whatever it is, you really don't have that much control over it. So putting 100% in is just not a great idea. It's much better if you have a well-structured chunk of investments that can take care of you no matter what. And then with any additional money, you can then be aggressive and do whatever the heck you want with that. And know that the risk is there, that it does terribly, but also know that there, in your mind, is a fantastic either short-term or long-term opportunity for that other piece of money that you know you don't need to live on. I'll give you a second example real quick, which is a younger client. Everything's going well. Good job. They have plenty saved up for retirement already. They keep their expenses low, so they're not having any budget issues or regular cash flow issues. Yes, stuff comes up when you're younger and raising kids and all that stuff, but for the most part, everything's in good order. Like I said, retirement is not a concern for them at all because of how much they've already saved. So they're in good shape. So they come in and say, hey, and again, I'm changing the dollar amounts. You won't know who they are. They say, hey, we want to put $200 a month into cryptocurrency. Yeah, great. I think they're expecting me to say, no, we want to, keep this diversified and do all this other stuff. And I looked at him and said, go for it, because everything else is covered. Your retirement's in great shape. Your cash flow's in great shape. You have a chunk in the bank at savings. You're not overspending. If this $200 a month isn't something that you really need and it goes to zero, you're still fine. So I think they were expecting some resistance, and I looked at them and said, yeah, hit it. Do your thing. Go for it. What we don't want is to have that thing be 100% of everything they're investing in, or even half of everything they're investing in. You can take this other money. It could be, if you're younger, just a couple $100 a month. I don't care what it is. I don't care if it's gold, silver, crypto. I don't care if it's deep out of the money call options on a certain stock. If it's not money that you need and you're willing to accept that risk, knowing that everything else is in good shape, which is the first key, we have to have everything else in good shape. We can't be shoving this money that we need to live on in something super risky. But if everything else is taken care of, go after that shiny object. Go for it. It's fine. If everything else is covered, it will be fine. So, point being, there's a lot of shiny objects that people like to focus on. There's under the radar stuff that people don't really even know about or focus on, which they probably should. But that's not the point. The point is get everything in really good shape. Then, if there's a shiny object that you want to focus on, use that extra money and go focus on that. It could even be starting up a new business if you wanted to do that. Take that cash flow, go do something with it. You can take some risks knowing that everything else is already set up and planned for and has you in good shape. That's where you focus on those quote unquote shiny objects that you want to invest in. Use that extra money you can risk knowing that if you lose it all, it's not going to have a major impact on you. That is where you take that risk.